She was an intern in your second term? An intern? You! Welcome everybody to Markonomics 101 presents Hoot Loot, where you come to be informed, be amused, never be misled. What you just saw at the beginning of the program was be finding out some very bad news, and I found out some very bad news about the First Lady last week. I don't even know where she is. I don't want to talk about it. I don't want to talk to her. I just want to have a good time. Today's show is called Dangerously Close to the End, and that's because, we're starting to see signs that, just like where I am on the edge of a cliff here, that we are about to walk off the edge of a cliff. We're also going to have our Learn and Earn second part at the end of the show. And basically, please subscribe and please like and subscribe. You'll find it right up there. And we give you the best information you are ever going to get, and all for free. So we're coming back at the top right after this really brief timeout for the charts. All right, we're back with the charts, and they're telling us something different this week and something significant. So I want to talk to you about that, and we're going to make this as educational as possible because this is Wednesday, Hoot University, where you come to learn, earn, information, education, no fabrication. That's us, okay? Dow Jones Industrials. Now, this one is compressing to a point, and that's a big part of today's program. It's going to be about ascending wedges, descending wedges, and why they're part of a very valuable, to be able to spot them is very valuable in being able to predict future direction. This one is very much, if you look at the very end of it, you could draw an ascending wedge. Like that is an upward sloping triangle. And an upward sloping triangle that is more, is looking like this rather than one that is downward sloping. There's a difference, and we're going to show you why and tell you why. The Nasdaq 100, now this one looks like it's in a bear flag again, is what we've said. It's bumped up against the top, and this one looks like it turned around today. The canary in the coal mine was down, some of the big stocks were down, and it really looks like it may have just run out of gas. We'll see, but that's what it looks like to me. It certainly would be expected after a bear flag. S&P 500 looks pretty healthy still, so this one really gives us no warning of anything going wrong. S&P small cap. This one also, the small caps today were, had a strong day. Yesterday, a weak day. They are going in opposite directions of the Nasdaq and or the Dow. So what we're seeing is indexes, some up, some down on the same day. Some this way, some that way. And usually when that happens, that means that there is non-uniformity. And non-uniformity is something that is going to cause change to occur. So, when you see that kind of stuff happen, it means that there's not enough money to push everything up simultaneously. Dow Jones Transportation, again, I have really nothing new to say about this right now, except it still is close to its top, and it really looks like it is still screaming higher. US dollar, also very significant because the US dollar right now on a counterintuitive basis is basically it's broken out from a rounded bottom. Now it looks like it's consolidating. It may just go up. I don't know why. I've read today that out of the dollars, the dollar stock, there's something like 18 trillion today versus 4 trillion a year ago. So how on earth you go up when you have that many dollars just being sprayed around? I don't know. I guess that's part of the reason stocks are going up. Me suspects is that there's just a lot of dollars around chasing, not as many goods. We're going to have inflation. Bitcoin now. This one hit a new high barely. This is an ascending wedge pattern. Now the reason I'm starting to look at ascending wedges here because these are usually pretty reliable reversal patterns. Why are they? Because the bottom part, the steeper they are, the more likely that the breakdown is going to be down rather than up. I mean, simple as that. If it's really steep, you have to get almost a vertical breakout for it to be, for it to break out positively, and that in and of itself is going to end up being terminal. So, these usually set up for, a complacency and then just a downward break normally. So Bitcoin is in one, lots of companies are in one, and so we see a lot of patterns of the same kind saying the same thing. Now we're going to go to weekly, and this gives us a little bit of a guide. Now notice in the past Bitcoin's had other bubbles. Okay, so it broke down in 2018 You know, it's had like 6, 7, or 8 of them since its founding, and in each case they've gone down from peak to trough about 85%. It's probably too late to buy this year. You know, you might squeeze a little bit out of it, but you're going to get an 85% drop at some point, and you're going to see this thing just absolutely wipe out a bunch of people. Everybody thinks that this thing is, you know, has got incredible value, and in all honesty, all you buy when you get Bitcoin is a password. Okay, think about that. You just get a password, and there's some other things that we're going to tell you about it down the road that is really pretty amazing. Okay, so now these are commodities. We've talked about being in a commodity cycle, but what's interesting here is we have that stair-step pattern again, where we have nothing but bull flags. Commodities are early in their cycle. You can still buy relatively low, I suspect, and you can have several of these bursts and then pauses, bursts and pauses. You have 10. For all I know, maybe commodities are going to be up, you know, 10 times from here. These are very constructive. This is what you want. This is how a market goes up and gets people a little bit complacent, keeps going up. So this is a very good pattern to see for a continuation. Unleaded gasoline. Now this is interesting too, in that it has remained above its uptrend line, but it has a little bit of what looks like a rounded top. So we'll see. What we've noticed is rounded tops could sometimes be a continuation pattern, but it hasn't broken either way. So right now we're going to say neutral, but it still looks like it's probably good. Gold again barely bounces off of that horizontal line. If gold should break through that line at about roughly 1680, it's gonna have a huge move down, potentially another 400 points, and that would be very interesting if that would happen. I continue to think it shouldn't, but a lot of weird things are going on, so you can't get wedded to one particular view. I would swear, I've sat here any number of times and gone, it has to go up. Well, it hasn't, and it's still, I'm going to say it ought to go up. Silver now is behaving better. It still does have a sideways pattern where if it breaks above 30, it's bullish. Breaks below 22, bearish. I'm leaning toward an above 30 break. I still do believe that this isn't enough short supply, that miners and all that involved in this are going to do okay, but just not right this minute. Copper miners, what you notice here, parabolic uptrend, consolidation, and it broke out, and it's probably moving for yet another nice move up. That's an important commodity. Copper is in a lot of things, pipes and wiring and just everywhere, housing especially. So it's a very important commodity, as is crude oil, which is also in a lot of things. Now this one does look like it is broken positively. So I would not have thought that this had another leg up in it, but let's see, it might. And right now the chart says it could go for another leg up, and maybe shale oil will not be enough to to keep it down. But in any event, this is not good news. Crude oil's in everything. Petrochemicals are in everything. Ace's dog food, even some in the First Lady somewhere in there, and you just makes everything more expensive. So now we go to the Invesco Agriculture Fund, and we have exactly that, a bull flag following a parabolic uptrend, and it looks like it's broken out. It has every possibility of continuing that move. Now, when you have something like a bull flag, that's called a continuation pattern, especially if the move before it was from the same direction. So a continuation pattern is one in which the expectation is the asset will continue to move in the same direction once a breakout occurs. Reversal means it's expected to move the other way. Some patterns are mostly reversal, some are mostly continuation, and we're going to talk about those today too. The base metals fund, this one has made a little triangle, which is symmetrical triangle, and it just looks like it's on fire, broken up. And these are basic building materials, basic construction materials, basic metals, tin, lead, zinc, steel, iron, that sort of thing. And this looks terrific. A triangle is usually a continuation pattern. You'll have new numbers of them all the way up. So again, when you have a triangle, you expect what occurred before it to occur after it. And in this case, it looks like that's happening. Palladium broke out of a sideways pattern and it's up and away, sort of like the First Lady. But this is also a sign of inflation and a sign that things are getting more expensive, especially because it's a component in electronic vehicles, and we're going to have so many electronic vehicles we're not going to know what to do with them pretty soon. All right, 10-year treasuries are consolidating the yields, consolidating at a very high level. I mean, the market has been acting like it's really retrenched and it's the pressure's off. No, look, when you look at this and how far it's gone, and a consolidation like that is very much expected, and 10-year yields were up today. I think it very well may be over. There is really a lot of pressure out there. So, and here we go again. Now this is the ProShares Ultra Treasuries. These are the hedge that I've described in the past. Now you notice it's consolidated in a descending wedge. Okay, so a descending wedge in blue is where you have the highs coming down and the lows maybe coming down, but at a lesser angle. So what you have here is you're likely to have a break higher because that's a lot easier than a break lower, and plus it just looks very constructive the way it's put together. So again, it's a descending wedge. It will tend to be usually it's a reversal pattern. In this case, it's a continuation pattern. So continuation pattern, a descending wedge can also be that too, but you'll know by which way it breaks. So you don't really have to know that in advance. And we'll go on to the next. All right, now we're looking at the 30-year, and again, the consolidation pattern is very good. Plus, we also have these things at 2.3%. Just yesterday, the consumer price index was reported at 0.6%. That's annualized at 7%. That's still possibly low, especially compared to these. You do need a real return. So, these are now like negative 4%, so they're likely to be pulled up. And, basically the whole reason you don't know that things are going up in price is because everything's reported X energy and X food. Like you never eat or you never go anywhere. And that's basically the problem with government statistics. They tell you, they never put them quite in context. So Amazon, now these are the mega caps. Look at the way it turned down today. Okay, so right now it was looking at a sideways pattern. It's now turned down. So we're going to keep an eye on this. But now all of a sudden we're getting some of the big caps to really start to turn down, and this is one of them. Facebook too, it was starting to look really good, and right now it is very close to breaking that accelerated uptrend line. So we might have a false break up on Facebook. You never know. Tesla, my favorite company. This one was now we think maybe in a bear flag. It turned down about 40 points today. And there's still people calling it, $2,000, $3,000, $4,000 per share stock. No, I don't think so. But it does have a target zone. This thing, will have a repricing at some point. I'm positive of it, because this represents, the canary in the coal mine, the most absolutely desperate money there is. So Qualcomm, this one has done as predicted from break from a downward from a rounded top, and also notice how it started to turn down today too. So we're now starting to see companies that are major, start to lean negative, and I think that it's very possible we've seen it, that the end is approaching. FedEx, big transportation company, again, nothing quite significant yet, but we're watching it. It's gone from negative to neutral. IBM, this one we've talked about it. It broke up. Now look at that. It broke down. So this one, even the ones that have kind of broken up are starting to kind of run out of gas, run out of steam, and that's a very bad sign right here at this time. So, and Intel, the big huge chip maker, in an ascending wedge, and look, that thing just broke down today, and there's only look at how you can only break down. You can't really break up from that because it's so steep, and that's what makes an ascending wedge reversal pattern most of the time, because you're going to break in the direction where you don't need as much power, and in this case it's down. So an ascending wedge, you typically is a reversal, you break down, and here's a case of that. JP Morgan is now looking like it's in a rounded top. It's broken down from its parabolic uptrend. Why a bank would have a parabolic uptrend is beyond me. But this is one of the key drivers. So this one is starting to look like it's getting close. Target, this one, unlike the first kind of analysis we did, is actually looking pretty good still. It broke out from a consolidation pattern, and this one would cause one to believe that there's still pockets of strength. I don't know. I'm not sure, but things are more tipping over negative than positive. Okay, UPS also is broken out, and you can see that that one has had a little bit of a breakout that's positive. We'll see though. It started to come back in today, and this one, you just right now, the best thing to do is to be in cash, be out of it, and just observe, look, and don't try to get too wedded to anything. And finally, we've got Raytheon. Again, this is a Dow component, a big military company. It used to be called United Technologies, and it's an ascending wedge. So again, there's an awful lot of key stocks in this ascending wedge pattern, and that's what I want to show you today. So you've now seen rounded tops, you've seen the stair-step flags, the bullish and the bearish. Now you're starting to get all the technology, all the lingo together. And in just a minute, we're going to be back with the new question for Learn and Earn, and some other stuff in just a minute. Hi everybody, we're back for our last segment here. Now on Learn and Earn, the question is, what's the difference between a continuation pattern and a reversal pattern? First person to put it when this show is posted, underneath the where the comment section is, earns another 50 smackaroos. And thank God no one has called. Oh, hi honey. I've been so worried. Where have you been? All this stuff about your past has got me so worried. Oh, man. Oh, what? My past? Well, I told you. She looked like she was over 18. And she had a license. She was over 18. Hello? Hello? Oh.